The Vanguard Total Stock Market ETF, VTI, is one of the most popular ETFs for investors seeking broad exposure to the entire U.S. stock market. Unlike ETFs that focus only on large-cap companies, VTI tracks the CRSP U.S. Total Market Index, which includes large-cap, mid-cap, small-cap, and even micro-cap stocks. This makes VTI a truly diversified option, giving you exposure to thousands of companies across all sectors and sizes. When you invest in VTI, you're essentially buying a small piece of the entire U.S. stock market. Its holdings include familiar names like Apple, Microsoft, Amazon, Tesla, and Alphabet Google from the S&P 500, but it also includes smaller companies that have high growth potential. In total, VTI covers around 4,000 stocks, making it one of the most diversified ETFs available. One of the biggest advantages of VTI is its low expense ratio, just 0.03%. For every $10,000 you invest, you're paying only $3 annually in fees, keeping costs low and maximizing your long-term returns. Over decades, this low expense ratio can make a significant difference in your investment's growth compared to higher-cost funds. Because it covers the entire stock market, VTI gives you exposure to all sectors, from technology and healthcare to energy and consumer goods. This diversification spreads out risk. If one sector or company underperforms, the impact on VTI is minimized because it's balanced by other sectors and companies performing well. Let's look at an example. Suppose you invest $1,000 in VTI and the total U.S. stock market rises by 10% over the next year. Your investment would grow to $1,100, minus a tiny amount for fees. Similarly, if the market drops by 5%, VTI's value would fall to $950. VTI mirrors the market, so your performance depends on how the overall U.S. stock market does over time. One of the key benefits of VTI is its simplicity. With a single investment, you're exposed to thousands of companies, eliminating the need to pick individual stocks or worry about rebalancing your portfolio. It's an excellent option for long-term investors looking to grow wealth steadily over time, and it's especially popular for retirement accounts like IRAs and 401ks. Another advantage of VTI is its liquidity. It's one of the most traded ETFs, so you can buy or sell shares during market hours without worrying about large price fluctuations. This makes it convenient for both beginners and experienced investors. However, like any investment, VTI comes with risks. Because it tracks the entire stock market, it's directly tied to the market's performance. During a recession or market downturn, VTI's value will drop along with the rest of the market. Additionally, while its exposure to small and mid-cap stocks can offer higher growth potential, these stocks can also be more volatile than large-cap stocks.